What's going on, investor family? You're listening to the Stock Market Tour Guide podcast, where I help you navigate the uncertain world that is the stock market. I'm your host, Stock Market Jay, and I'm here to save the day, bringing you the news you can use with regular fundamental analysis, insights, helpful tools, and strategies. All right, guys. So, as a disclaimer, as always, this is not financial advice. I am not your financial advisor. I am not a guru or your guru. I am simply a fundamental stock investor who believes that proper education prevents poor performance in the stock market, right? Um, Education is what limits risk and maximizes profits, okay? And the problem with a lot of investors these days is they're unwilling to do the fundamental research or the go through the education process um, in order to successfully, intelligently, and practically invest. I can't stress that enough. I think I sound like a broken record half the time, but just being honest, guys, that's literally what the basis of my platform is. That's literally the basis of what I represent and my brand represents. It's education based. Um, because you can't win the game unless you know how to play. A lot of people just jump in and think that they're gonna make money, but then when they ultimately lose money, they want to say things like, "Oh, stocks are rigged." They want to say things like, investing is rigged, investing is risky, things of that nature, because they don't know, right? They don't know. Um, they don't have one, the financial intelligence, two, the emotional intelligence, or three, the proper information. That's going to be a key one right there. They don't have the proper information to be a successful investor, and that's where I come in at, right? That's where I want to help my audience, my following, to understand and realize. So first, if you're catching me on YouTube, please like, comment, subscribe to the channel so you don't miss out on any of the valuable information that I'm sharing with you guys on a regular basis. My goal is to help as many people as I can and equip them with the tools needed in order to succeed in the stock market, right? That's what I'm here for. And I just pretty much use my experiences as an active investor, as an investor who's in the markets every day, as an investor who's researching businesses every day, as an investor who's understanding and learning the economy and how it affects businesses as a whole. Because the economy is what drives, the marketplace, and it affects the businesses, and then it trickles down to the individual investor or to the consumer or what have you. So today I want to give insight on how to build a stock market beating portfolio. If anyone here follows me on Facebook, let me drop these handles. So Facebook, Justin Lamar. Another page, Justin Ellsworth, is my business page on Facebook. Follow me on Stock Market J on Instagram. And of course, you can catch my podcast on Spotify, Anchor, Overcast, Radio Public, Stitcher, Amazon Music, and so much more. Just tune in, check me out, right? Apple Podcasts, Google Podcasts. Tune in and just check me out. I got this. This is for you guys, right? But for anyone that follows me on Instagram or Facebook, they know that I regularly outpace the stock market pretty much all the time. Okay, I have pictures. I have, actual. I show receipts of, hey, this is what the stock market's major indexes did, like the S&P 500, the Dow Jones, the Nasdaq, and then this is what I did. And typically, I'm doubling their output regularly. If the Nasdaq or the S&P or the Dow get 1.5% on the day, it's a good chance I'll get 3 or better. If the major indexes are in the red for the day, chances are I'll be in the green. Or if stocks have just got demolished that day, I won't be as much red as those guys are. You get what I'm saying? So, but that comes with proper education, right? I educated myself in a manner that I'm able to do that, right? I'm able to consistently outpace the stock market's highest weighted indexes, and you can too, and I'm here to show you how. So first, one of the keys that I use is I like to pick, you have to know your risk tolerance, okay? You have to know what you're emotionally capable of sustaining while as an investor, right? Um, so I pick stocks that aren't too volatile. I lean towards those value stocks and those dividend stocks because they're typically not too slow of growers, but they grow, right? They typically don't go up and down regularly. They're pretty risk off for the most part. What I mean by risk off is if you don't want to, if you don't, I don't mind risk, a good deal of risk, but because investing is risky, but the way to limit it is by education. But if you're risk off, it's like, okay, I don't want to do any speculative positions. I don't want to have any too many growth plays. I don't want to have too many tech plays because they're known to be more volatile just due to the way that the markets have always been. That's just like one of those things where volatility and tech stocks, volatility and growth stocks, they go hand in hand, right? Volatility and speculative companies, they go hand in hand, right? So out of like two portfolios, I probably have, let's say, 16 positions in one. I'll say about 12 to 14 positions in another one. I have a total of 6 companies that I invest in that are potentially tech or growth based. Okay, I'm not big into the tech space. Don't get me wrong. Maybe at another point in my investing journey, I'll switch more to the growth. I'll switch more to the tech side of investing because it's more money to be made in those growth companies. It's way more money to be made, but it's also more money to be lost, and you have to be able to, like I said, understand yourself as an investor and ride that emotional roller coaster ride. Like I said, me personally, I like to find that value. I like those value stocks, and then I like those dividend stocks as well. And most dividend stocks actually have the genetic makeup of a value stock, right? And all value investing is just finding stocks that are selling below market value, finding those stocks that are great, wonderful businesses. The market probably hasn't caught up to it yet, or they're just selling at low valuations, low PE ratio, low price to book ratio, low price to sales ratio, right? And they're undervalued at their price as well. They're not at that intrinsic value. Those are the companies you want to invest in, right? You want to invest in companies with those low multiples. You want to invest in those companies that are selling at low valuations, and that are still wonderful companies that are still growing year over year, still growing 7 to 10% a year, still growing their revenue, still growing that free cash flow, still growing those profits, that bottom line number, still growing those earnings, increasing those dividends, things like that. They have the genetic makeup of a good, strong, wonderful company. The stock market just, they're not a darling of the stock market, and that's how you find value in the stock markets, right there. Okay, you want to have companies, stock and companies that are selling at low multiples, and that's how you get the most bang for your buck. Because if I got a low PE ratio, that means I'm paying less money for every dollar that company earns. If I got a low price to sales ratio, that means I'm paying less money for every sale that company makes, right? Um, and 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 the name of the game is to ultimately, we want to make money, but when you're buying these stocks, you want to save money. Okay, that's the name of the game. When you go to the store, you like getting stuff on sale, right? I like to get stocks on sale, and this is how you do it. Okay, so back to the matter at hand. So yeah, I like to pick stocks that aren't too volatile. So with that, with me limiting that volatility, my gains typically tend to trend upward as opposed to up down roller coaster ride. It's all typically in just one direction. If it goes up, it might go up slowly, and that's fine with me. If it goes down, it won't go down too much. That's even better with me. Okay, so when I invest, I like to invest in companies that are, like I said, they don't have to be slow growers. Like you can find a stock that's, and this is just for an example purpose, right? This isn't, me giving you go buy stocks that are like to have, these qualities, but you can find a stock that sells at $5 per share, and in 4 to 6 months, now it's at $10 a share, right? And you didn't have to have that roller coaster ride of the ups and the downs, right? You don't, I don't have I don't mind taking risk. That's why I have those 6 positions where I'm, risk on or growth or speculative, right? Because I, found some great companies. I feel like they're going to do some great things. It's a chance they will. it's a slight chance that they won't, and that's fine. I'm okay with that. This isn't like these aren't major positions in my portfolio where I'm just, oh my God, I'm going to lose money, right? So if you don't have an issue with that volatility, fine. You do whatever you got to do. But I'm telling you how I outpace the markets and how I beat the markets all the time. I don't have an issue with the techs or the growth stocks, but I prefer the established businesses, which are typically seen in the value or dividend companies. Most of the time, those value companies, or those dividends, I should say, I'm sorry, most of the time, those dividend companies are relatively large, and they, in a sense that they've already hit their growth phase. They've been growing. They're not done growing because they're still growing their business year over year. But chances are they might be so big as a business that it's harder to, a 10% growth for a large company doesn't look the same as 10% growth for a smaller company. Okay, that's just the cut and dry of it. Just like I mean, hey, but this is the name of the game. So I would rather have a company that's growing consistently as a business and the stock price is moving in an upward trajectory, as opposed to a company that's having mammoth growth as a business and that stock is just up and down. I don't want to stomach that. I choose not to. You have to know your risk as an investor, okay? So the first thing I do in building a stock market beating portfolio is I pick stocks that aren't volatile. Okay, if you go back and look at a stock and you look at its 3 month history, its 1 year history, its 5 year history, and that thing is just all over the board, you know. So that's just one thing to that. So I like to, second, I alluded to this already. I like to invest in companies with a track record of growth as a business. Okay, these companies are growing their revenue. Okay, they're growing their free cash flow. They're growing their profits. They're growing their earnings. Okay, they're growing their guidance year over year. Right, they're doing financially. They're set in terms of always increasing those numbers that help grow a business, right? They have a solid business model. You want to invest, that's another thing. You want to invest in companies with a strong business model, okay? You want to invest in companies that, one, know how to make money. Two, that know how to invest, okay? I have a lot of companies in my portfolio that are well diversified in their holdings themselves. I have companies like, let's say Nike, for instance. They have a bunch of assets under management, okay? They have Converse, they have Hurley, they have, of course, the Jordan brand. They have a bunch of different Nike brands. They have a plethora of assets under their umbrella, which allows them to be able to consistently grow as a whole business. Like I said, bigger businesses take a little bit, they require a little bit more work to grow. And you want to have a business that's well diversified. That's going to be another. Okay, let me backtrack real quick. So yeah, you want to have companies that have a strong business model. They know how to make money. They know how to invest money. They know how to earn money. They know how to multiply money, right? They know how to they have pricing power. They're able to, like, when inflation is high, like right now we're at 9.6%, like crazy numbers, right? The highest has been in 40 years. These companies with great pricing power, they're able to increase prices on their products and services, and they won't lose any demand in the process. Okay, that's what you want. Coca-Cola recently raised the prices of its products, and guess what? People are still doing. They're still buying Coca-Colas. People aren't not buying Coke because, oh my God, they raised the price of a single Coke by $1. You know, these are for example purposes. Coke is a big, strong company, and they have been around for quite some time. They're a big, growing company. They have a bunch of assets under management. They know how to navigate during any economic cycles, right? So you want a company that can, like I said, one, is well diversified in its investments. Two, knows how to make money on capital. They know how to give you a good return on your invested capital, and they give you a good return on equity overall. That's what you want companies that to be able to do. You want to invest in companies that, when inflation is high, they're able to raise those prices. When the economy is in a downturn, you want to invest in a company that slows down their hiring. because you don't want to increase the money you have going out when you're not increasing the money you're not increasing the money that you have coming in. Because if inflation is high and you're hiring more people, you're spending more money. Okay, even when companies have layoffs, like it's unfortunate for the people that are getting laid off, but as a business, that's the proper move to make. You want to invest in companies that make smart business decisions. This is a part of that business model that I'm talking about, right? Um, so you want to invest in companies that make the right moves, that historically have made the right moves. That's why I like investing in companies that have a track record of growth and that have a management team that has been in place for over 5 years, because they're going to be consistent enough, they're going to be solid enough, and they have the foundation to where they're going to continue to trend in an upward trajectory, if that makes sense. So I like to definitely invest in businesses that have a solid business model. That's going to be a key factor for me as an investor in my stock picking strategy. I want to invest in companies whose products and services are always in demand. I spoke of Coca-Cola, how they raised their prices and people are still consuming their products, right? Or Procter and Gamble, companies like that. People are going to always be buying deodorant. They're always going to buy body wash. They're always going to buy all of those different type of products, right? Johnson and Johnson, like I said, I'm not telling you to go buy these companies. These are example purposes, okay? Understand, but Johnson and Johnson, that's a big, strong, wonderful company, been around forever. Babies consume, people aren't gonna stop having babies. Okay, if you were to invest in a company that invests in funeral services or funeral products or that makes caskets or something, you're gonna have a company whose products and services will always be in demand. Okay, investing in waste management company, that's gonna always be in demand. The world will always need certain things. Okay, the world will always need certain things, and I'll even use Apple as an example. Like I said, example purposes only. This isn't financial advice. I'm not telling anybody's companies. Don't get me wrong. These are big, strong, wonderful companies as an example, but that's what we're getting at right now, right? That's the name of the game. That's what I'm looking. That's the point I'm looking to drive home is invest in big, strong, wonderful companies that have been here for a while, have a history of growth, have a strong business model, whose products and services are always in demand. I'm giving you the recipe for stock picking, right? How you can just literally cherry pick great companies, put it in your portfolio, and always make money. This is the formula I use right here to where I'm consistently beating and outpacing the stock market's top weighted indexes day in and day out. Okay. Apple, like back to my example, Apple. They have a product that's always in demand. Due to their popularity, right? I'm pretty sure people that are listening to this right now are listening on their Apple device. Okay, I'm pretty sure a lot of you have an Apple Watch, a MacBook, okay, things like that. And I'm pretty sure on top of that, hold on, wait, check this out. I'm gonna take it a step further. I'm pretty sure you have iTunes. I'm pretty sure you might have Apple TV. I'm pretty sure you have that. You pay that $2.99 a month for extra storage and stuff like that. You know what I'm saying? Like this, Apple has products and services that are always in demand, and I use the iPhone. I have iPhone. I consume their products. I have Apple Watch, I have iPhone, all that good stuff. Okay. You want to invest in companies that aren't going anywhere. That's the bottom line. Okay. People have been, as Warren Buffett likes to say, chewing Wrigley's gum since the beginning of time. People have been buying Coca-Colas since the beginning of time. People have been eating at McDonald's since the beginning of time. Like these are companies whose products and services are always in demand. I can ask somebody this. I have asked people this. Do you like McDonald's food? And they're like, no, I hate McDonald's food. Like, why are they so big though? You know what I'm saying? Like, the company is constantly growing. It's growing and it's evolving and it's changing with the times. You want to be able to invest in a company that can grow, scale, innovate, and change with the times. They don't have to be a product that I typically invest in products that I like, enjoy, and consume myself, their products or services. But it doesn't have to be a product or something that I like. Like I said, it's not financial advice. This is an example. Me personally, I don't invest in McDonald's, but I would. I just don't. I just choose not to because it's not a product that I agree with. I love their business model. I look the solid business model. That's why they pop up everywhere. That's why they sell franchises left and right. That's why they have the amount of real estate that they have. That's why their company is growing as rapidly and frequently and consistency as it is because of the business model. They have a strong business model. They have strong systems in place that keep their company growing year over year. Like I said, I don't invest in it because most companies that I do invest stock in their stock is a company that I actually consume their product or I appreciate their goods and services. Right. I'm not the type of guy that's just gonna go invest in a company because it has a great because their stock does good things. Don't get me wrong. I'm not saying that I won't in the future, but as of right now, while my investing style is what it is, I only invest in things that I understand and that I agree with. And that's going to be a lesson to investors as well, too. I'm glad that point came up. That's why I love doing these podcasts. I just get to talk and run my mouth and just kind of give all that good game in those gems, right? Invest in things that you understand. Invest in things that you know for what it is. That you understand the business model, you understand how they make money, you understand their goods and services, right? I'm not gonna go invest in, let's say, uh, for example, just something random. I'm not gonna go invest in, mm, let's say, some new young tech company that has all the rave. They have, everything that like they're the darling of the stock market. Everyone's investing in them, and but you don't know what they do. You know what I'm saying? If I can't tell you how they make money or what they do, I'm not going to invest in them. GameStop, for example, this company is supposed to sell video games and like gaming services like the controllers and memory cards and all that good stuff, but they're buying NFTs and they're like, they have a crypto wallet and stuff. Like, I don't get it. Like, or do you make video? Do you sell video games to consumers, or do you like do this, that, or the third? I don't get it, so I don't invest in them. Like, I don't understand the business model. You know what I'm saying? Like, just because something is popular, something is hip, or something that everyone's investing into doesn't mean you have to do it. Like I said, if I don't understand it, if it's not something I even like or agree with, I'm not going to do it. I understand McDonald's business model, but I don't invest in those guys. I don't like their food. It's crappy food to me. It's unhealthy and it's crappy. I don't invest in the company. That's it. I don't care. You have to detach yourself um, from the money that can potentially be made to that kind of like, I don't know, that moral kind of standpoint. I'm getting a little off track here. Sorry about that. And just as I spoke with about businesses being diversified in their holdings and their assets under management, diversification is going to be a key factor in building a market beating portfolio. Okay. Reason being because you don't want to invest in all tech companies because typically when sectors or industries are down, it will affect everything. I can't remember what company it was. They were having an issue with the chips. It was a tech company. They had an issue with the chips and stuff like that. It's been a thing going on here lately. And when they reported whatever news they reported about it, literally every tech company took a hit that day. The crazy thing about the stock market is it doesn't care what if the news doesn't affect a particular company. It can, like I said, all this stuff only affected one company, but it brought the majority of tech companies down that day because the stock market has a sentiment of, okay, well, if this company is going down for whatever reason or having problems for whatever reason, then all of these guys are. The stock market is irrational. It doesn't care. So you want to diversify in the sense of, okay, I don't have all tech companies in my portfolio. If you just love tech companies and you know it, you understand it, you love it, fine. You'll be, I hope you have the stomach to the emotional intelligence to stomach that risk. Okay, because when one sector or industry is down, chances are the majority of the companies in that sector and industry are going to be down as well. So that's why you wanna diversify. You wanna have you some finance in there. You wanna have you some automotive in there. You wanna have you some consumer discretionary in there. You wanna have you consumer defensive in there. You wanna have you some tech. You wanna have you some growth. You wanna have, you know what I'm saying, those different, things, and you wanna have some commodities in there. You wanna have um those different just areas in the market. You want to have different businesses. You want to have different areas of the market in order to balance out your portfolio. Building a solid portfolio that can beat and outpace the stock market's most top weighted indexes is about that balance. Okay, when my portfolio is up, typically every company in it is up. When my portfolio is down, typically there are still some bright spots in there. Like it might be like half my portfolio is down, the other half might be up. That's just to limit that risk and limit that loss. Okay. And then, like I said, it maximizes those gains. So you want to be well diversified. You don't want to be in all energy, because when energy is down and gas and oil is down, you're down. And if they have a day or a month or whatever cycle where they're just, I'm using this as an example because energy is still up right now. Currently, it's one of the safe spots to hide it in the market. So it's an example. But if energy is down, you're just going to be getting demolished all across the board. Okay, the automotive industry, this is a great example. They're down right now. The automotive industry is down. I probably have like two automotive companies in one portfolio and then one in the other portfolio. They're getting beat up. They, don't get me wrong, they have some bright spots here and there, but they're getting beat down. Okay, so it's not wise for me to own all automotive companies. Okay, and Tesla is not an automotive company in my opinion. They're a tech company. Okay, that's why they're in the Nasdaq. So they just kind of don't get that twisted, right? So it's not, I don't want to have all consumer discretionary. Walmart's getting beat up, Target's getting beat up. Everyone that you can think of right now is getting beat down in consumer discretionary, and you don't want to be getting beat down with it. But that's why it's perfect to diversify. Um, you don't want to only own companies that have, with like social media companies or subscription based companies, because it's going to be a time like right now in the economy where people have to choose, because inflation is so high. The dollar isn't going as far as it normally did, as it used to do. People have to choose. What am I going to keep? Am I going to go feed my kids and put some gas in my car, or am I going to keep this subscription to Netflix, keep this subscription to Disney Plus and Hulu and stuff? Like, you have to, you know what I'm saying? You have to understand that, okay? So you want to be able to invest in a company that, so you want to have, this is the key to building a market beating portfolio. Pick stocks that aren't volatile. I can't stress that enough. Pick stocks that are not volatile. Pick companies with a track record of growth as a business. Pick companies with a strong business model. Pick companies whose products and services that are always going to be in demand, that the world legit needs to run and thrive with. Pick companies that you understand that in your realm of your circle of competency. That's a key. That's a key. And pick and diversify your portfolio. That's how I beat the stock. Man, the stock market isn't hard to understand, man. People make it hard. If you're willing to do the fundamental analysis, fundamental research, if you're willing to understand simple economics, you don't have to be an economist out here. But if you have the ability to understand economics and how it affects businesses, because the economy affects business, if you have the aptitude to be able to understand that, and these are things that can be learned, you'll do just fine in the markets. I assure you, I'm not a rocket scientist, but I'm able to outpace the markets regularly because I understand a few things about investing. And that's why I encourage all my listeners to tune in often, to keep up with the content, and to follow me all across the board on every platform, because you never know what bit of information you're going to get and how it can affect you, okay? Especially if you're not keeping up with the markets. I encourage everyone to watch Yahoo Finance every day. That's how I keep up with business. That's how I keep up with what's going on in the world. I encourage everyone to watch CNBC all the time. I encourage people to watch every Warren Buffett interview you can check, or have it comes out, or that you can like go find. I encourage everyone to read all his books. I encourage everyone to read The Intelligent Investor by Benjamin Graham, or Securities Analysis by Benjamin Graham. I encourage everyone to listen to Anything You Can by Peter Lynch or Ray Dalio. You just have to know how to play the game. When it comes to investing, you have to immerse yourself into the culture, right? You have to immerse yourself into the world of stocks, right? And then as you are doing that immersion and deep diving in that vertical integration, you'll begin to see that the economy is directly correlated with the stock market. You'll begin to see that. And then, because stocks aren't just numbers, stocks are businesses, and businesses are part of the economy. Like, it goes hand in hand. You see what I'm saying? So it's been a blast, investing family. So until next time, I'm Stock Market Jay, and I'm here to say today, bring you some news you can really use. All right, guys. Peace.